tell me in terms of, I know you got two other slides that you wanted to share, and I'm conscious of time here. I want to sort of wrap up on the hour. In terms of, and then we'll move to our VIP room for the FAQ. But we've got basically the kind of the three questions I had here was kind of where do the opportunities lie? I think you've probably spoken about that at quite a lot of length. Anthony, I just don't want to make sure I'm missing those two slides that you had. So you need to tell me if it's related to that question or the next one, which is there an overall strategy that investors should be focusing on? And my third question was, what can we copy from the wealthiest investors? So I kind of going to ask all three of them, and you can kind of relate to what you think and those two slides that you asked me to prepare as well.
I want to jump in on the private equity side here, because it's something which is so important in family office portfolios. Now, when I say private equity, I'm talking about unlisted investments and opportunities, into, this is the one I'm looking for. And opportunity. This is investing into direct opportunities. Okay. Now, this is an interesting graph, because one thing about, I would say 85% of our clients is they were entrepreneurs, they built big businesses, they sold big businesses. So they understand business, and many of these people are interestingly quite kind of great entrepreneurs are not great investors. I've said that many times. Okay. And there's a whole reason for that I won't get into tonight. We can do that in the psychology of investors. But what this is showing, when you talk about opportunities, I think private equity is such an inaccessible asset class for so many people. Okay. It's either very difficult to enter private equity because, one, the ticket size is very large. Number two, the illiquid nature of private equity is an investment cycle of 7 to 10. Now, previously you went into it, it was 5 to 7. I've never seen a good private equity portfolio play out and deliver its returns in 5 years. So private equity is really something in the wealthy families. And this answers that last, what do wealthy families do? It's why family offices are the first people approached by new venture capital businesses, by business opportunities. Family offices are invited, and we are regularly invited as a multi-family office to bring investors to opportunity, which gives us a massive, competitive advantage in that. The fact that we also have incredibly astute private equity managers who are able to bring that to a market, all of those opportunities. Now, when you look at this graph, what I'm saying here, this graph shows you three scenarios at the top. The first scenario says I had 30% in bonds, 50% in stocks or listed equity, and I had 20% in private equity. 90% of high net worth family offices, 90% of high net worth investors have strong allocations in private equity. If you don't know what private equity is, it's just companies where you're getting access to more concentrated risk and return. Those portfolios that held 20% delivered much higher returns over the period. As the private equity allocation goes down to the more traditional just financial markets and listed market space, you see the actual returns of the portfolio drop. Now, the falsified environment with quantitative easing was the first time in a decade that the S&P 500 performed as well as private equity. So one of our biggest opportunities, we believe forward-looking, is going to be the inclusion of private equity in a person's portfolio. Now, we live in a beautiful digital age where people have created fractionalization of private equity and ways to access private equity, but don't break the rules. Alternative investing and going into private equity goes back to exactly what your definition of risk management was. Analyze, understand, have a good manager, understand your costs, and most importantly, understand the patience required to get these higher than average returns. But we feel in the next decade, private equity will outperform, the financial market significantly. Now, that's a change in the generation of people inheriting the wealth. conscious capitalism, people looking to control the investments, where their money is going, the impact that they're making, and that aligning to their views on how the world needs to be managed. And this is why we believe private equity is going to get even stronger, because given a portfolio of fracking or oil and gas or fossil fuels, and a person who is inheriting wealth in a generation of highly conscious investing, the listed market is not going to have the traditional allocation, and the impact investing company, the company that's putting up solar as an alternative energy, is going to get the money. And we are able to balance conscious capitalism and returns, okay, in that changing market by having a huge amount of concentration. So this, I just wanted to talk to this slide about the power of private equity as a future opportunity, on the understanding that it's a very illiquid asset class, okay? What we have done about that illiquidity is to look for a portion of the investment to be structured as debt. So a person is earning an income as well as getting these extraordinary higher returns over that period, which makes it easier to be patient. And if you can, derive, and Scott, the property game really well historically, if you can derive a cash-on-cash return, but you have that income, the game I'm talking here. So property private equity, for example, is just a direct investment into property. So we believe constructing that and having that 20%, between 10 and 20% in a portfolio, is going to make a massive difference to your compounding returns. I'm going to let Anthony take over after that and answer some of the 3 questions in one as well.